Good morning, traders. We write Wednesday, the 3rd, if I'm not mistaken, of April. Let me just kill my squawk here. Okay. Welcome to the Flow Show. Ryan will be back tomorrow. This is K-Man. I'm going to be your host again for today. So let's straight away look at what's happened overnight and what is waiting for us for the rest of the day and the week. It's going to be quick on the roundup of events because not that much world shocking happened. First of all, I want to transmit my sympathy with the people in Taiwan suffering from the biggest earthquake in the past 25 years. Bit of a personal sentiment there. My daughter-in-law is Taiwanese, so yeah, I'm really feeling for those people over there. I hope things are not going to get any worse over there. Right, moving on. China, the PBOC is still stubbornly fixing the dollar CNY sub 710. Still not impressing people, despite the services PMI coming in comfortably above 50 again. Dollar China is holding the 724.25 line for now, and doesn't seem the market is very stressed about whatever China could do. They are regularly on the offer, as we know, in the dollar CNY, the local, the onshore currency. Trying to cap the debates. We've also got Yellen from tomorrow visiting China, sorry, for the next 4 or 5 days or so. She came out with preliminary comments saying that it's going to be, she doesn't want to slime, she doesn't want to be too nice to China, but on the other hand, it's clear that the US wants high-level talks, keeping really a close eye on what's happening in China. So we could expect a few comments coming out of those meetings in the next few days, so that we will keep an eye on. Usually, when we had those talks about top-level discussions between the US and China, the Chinese yuan actually strengthened a little bit as a reaction to it, but not this time. This time the CNH remains under, let's call it mild, but still under a bit of pressure. We are trading above 726 right now. Right, moving into Japan, we've seen the services PMI come out also higher than the prior one. Lower than the expectations, but expectations are what they are. We're still relatively positive. Let me have a quick look at what the Nikkei did overnight, because I did not yet. Oh, it came down a bit. The other news that was out of Japan is that there. Let me see. Yeah, the output gap, and that's not reflected on the calendars. The output gap has closed, and even turning smalls positive to a whopping 0.02%. But the Japan economic watchers are saying that it means that Japan is moving in the right direction, economy-wise, and that is something that the Bank of Japan is going to like as well. Not that they are going to raise rates at their next meeting in this month, I reckon. But anyway, some green lights or green shoots continue to appear in Japan, which may have them just to keep up their hiking rhetoric come the meeting. In the meantime, and I'll have a look at the rates in a bit. Dollar yen is slowly grinding back towards the let's call it a big 152 level. There is, I think it's got more to do with the dollar, and as we've been endlessly repeating already, with the difference between the interest rates, it's very tough to stay long yen for longer. So the we're nearly back there with 20 points away right now, and the data this afternoon and for the rest of the week in the US could actually trigger a move through. I'll have a look at those upcoming data because they are important enough this week as well. One negative out of Japan today was an article saying that not all workers in Japan may benefit from those bumper pay rises. There's only somewhere between 15 and 20%. I thought I was quite surprised reading this low number, but only between 15 and 20% of the Japanese workers are part of one or the other union. So there's going to be a bit of talk around who is exactly going to get what. We should know this month or next what exactly the pay hikes will look like. We already know that the unions on average managed to negotiate a 5.28% pay rise, but that is mostly spread among the large to medium large sized companies. So we still have to really know what the middle to lower smaller companies are going to grant to their workers as well. So there is a little bit of uncertainty remaining, okay? But for the time being, the market is not really focused on that too much. Right, moving over to Europe, closer to home. Hawkish Holtzman is less and less hawkish, and he is clearly warming to a June cut now at the ECB. Still calling it data dependent, like they all are. But he said also that the 3% depo rate may still prove to be too tight over the longer term, given the weak productivity and the weak economic data that we get out of the Eurozone. So he's gradually shifting from being the uber hawk to at least or maximum neutral right now. He's even sliding a bit into the dovish camp, because he also added that the inflation may actually come in better, meaning lower, than what the ECB projections are telling us. And as a matter of fact, we had those February and March CPI data coming in this morning, ticking down 0.1% lower from expectations, but ticking down compared to the prior month. We had the month-on-month saw a bit of a blip, okay, but the year-on-year is what the market is going to look at ultimately, and that is still on a slippery slope. Those month-on-month data, it was already touted by some of the speakers, even Lagarde, saying that there may be a bit of a bump in the road, and so this being the last month of Q1. This is what we got. So month on month, a bit sticky, even a little bit bumpy, but the year on year is showing still signs of improvement or coming off. Shouldn't really change too much to the ECB picture. We're having ECB next week. What I do think, though, is that those revisions, and we saw Italy as well, revising their growth forecast again today for the 2024. They brought it down 0.2% or so. And that's a bit of a pan-European situation that we are seeing now, where the European countries have constantly to revise their GDP outlook lower. So that is still going to I think push the ECB at really next week, starting to hint at the next meeting being the one where they could really in June lower interest rates. All right, but that's something for next week. All right, funny story in the UK, Bank of England, and there's the article because we know that Bernanke and his team did an in-depth review of why Bank of England was so wrong with their projections during the years post-pandemic, and it seems that they are slowly coming to a conclusion there. And the big news is that they are going to move away from what they call their fan chart and going to move more into a what-if scenario-based outlook. So they say it's going to clarify the communication, it's going to clarify the rate path, and it's going to, and that was especially the one that made me laugh, and it's going to bring along much less errors than in the past. Yeah, okay. We all know how central banks, and especially the Bank of England with Bailey on as a head, has the power or the possibility to make errors for even calling how many sugars they want in their tea. So now we are moving closer to what the Riksbank is doing actually. So it took Bernanke how long? 4, 5, 6 months or so to come to the conclusion that the Riksbank method of how to project data into the future, especially inflation, is going to use. If that is what the conclusion were after 6 months of work, I think they could have done it after a day as well. Moving on. Okay, we're going to go into the United States of America. First of all, data, durables. Okay, factory orders a little bit better. Durables have really moved markets over the past months. So moving on there. Let's talk about the jolts quickly. So we had a bit of a revision, very small revision lower, but the number itself is remaining very stable. Now, in the subcomponents, there is a bit to talk about, but it's really clutching at straws. Now, what happened over the subcomponents is that the balance between the openings that we see and the supply of available workers and people wanting to work is getting much more balanced than before. So the imbalances that Powell was looking at are getting smoothened out. And also what we saw is the quits coming off quite substantially over the past month. So those quits being lower is probably going to put a bit less pressure on labor costs. And we already saw last month, remember, when the labor cost index came out, that the labor costs are ticking, not really coming down massively, but ticking down. So that may be of importance looking into what may come out in the NFP data later this week. Okay, so keep in mind those labor costs that may impact those, and I'm just going to front run a little bit what's coming in on Friday. So that may be impacting just slightly on the earnings, perhaps may impact those numbers a little bit. Okay, then we had the Dali and Mester out yesterday. So both are along the same lines, patients, both seemingly telling us that June is still pending as their month of the first rate cuts. I think it's Mester who said that she still is on the same line as the dot plots are showing, so the 3 cuts for this year. But both Dali and Mester were saying that, of course, also being data dependent, they're not in a hurry. So that, I think, tells us that the 1st of May meeting is probably going to more like another autopilot meeting, unless we get, and that's where we are going to start to look at for the rest of this week, very important, unless we get that jobs market starting to falter. Okay, this is what I've been banging on about for months now, the big domino that is still standing is the jobs market, and it continues to surprise people all the time, even though we get a bit more negative revisions all the time, but the actual unemployment rate, all the data are still quite supportive for the US and versus blocks like the Eurozone and the Asian bloc perhaps as well. So the rest of the day, what are we getting? We are getting, and I think that's going to be pretty important one as well. We do have ADP out. The ADP has been, we know it's a bit blind darts, okay, but they have been relatively okay as well of late, not showing any big dramas. Of course, headline number will always move the algos a bit, but I think for today, I think the ISM services are going to be the important number. And I would argue again, look at the headline number, prices of course, but then I'm coming back to what Powell told us as well. And by the way, Powell is speaking later today as well. I'm going to really keep a very close eye on this employment index as well. It did show, let me just quickly look at the prior numbers. Okay, it did show a little bit of a yo-yo over the turn of the year, had a pretty decent print on the February data, then a bit lower again, came below the 50 line again. So this is one that I'm going to really keep an eye on, a very close eye on for the afternoon, because I really think the labor statistics are really going to get very, very important. So we've got Goolsby out. Goolsby came onto the Fed as a dove and then moved into more neutral territory of late. So I would expect him to continue along that line, all right? But then we have Powell. He would have seen those numbers. I don't think, being 2 days before the NFP, that they will already have seen the labor data, but who knows? But again, as he said last week, where he was talking about that they are going to more closely watch the dual part of the mandate. That means the labor market as well coming back to the fourth. That is going to be possibly another market mover, okay? He speaks about an hour and a half, 2 hours after we get the ISM out, all right? And then one for the Swiss watchers among us, because that's going to come out before, excuse me, before the next flow show. We've got Swiss CPI tomorrow, okay? And Swiss is under the cosh. Swiss is still getting hammered. It's still, I think, a normal procedure of what's going on. It's been going on for Q1. Q2 started as well on a weaker note for the Swiss franc. Watch out what's happening here. We are expecting a little bit of an uptick, okay? So if we get that little bit of an uptick, it should perhaps push a couple of people to take a bit of profit. I actually did already after the European CPI coming in today. I took a bit of profit on my Euro Swiss as well, just reducing tiny the exposure on my Swiss. I still got dollar Swiss, still got sterling Swiss running as well. But this is an important one. If in turn we get an extra lower print, all right, if we get a lower print again, I expect the Swiss tomorrow to get another knock on the head. Okay, so that is one that I'm really going to pay very close attention to tomorrow morning, our time zone. Right. I think I've covered most of what is happening right now in the market. Yeah, we had a bit of a line coming out there. James put it on our in our chat room that the South African Central Bank and the Treasury teams are discussing a lower inflation target. The central bank governor has told one of the news outlets. I mean, it's a bit of a strange one because most of the rumors that we had over the past years or so were perhaps for central banks to look at perhaps bringing the inflation target a bit up, which is it's out of the discussions right now. Nobody talks about it anymore. But it's a bit of a strange one, and the reaction in the dollar rand has been a little bit strange as well, because it actually ticked up a little bit. Normally, when central banks are discussing lowering CPI targets, that means that they think that they need to fight it more, so keep the rates higher, and the dollar rand is absolutely not responding whatsoever. All right, so that for a little bit of a side one on the rand for those who are watching emerging markets. Okay, rates. What's happening in this market? Well, not a lot, really not a lot. We had this break in the euro dollar. I told you about this area here in the euro, 107.23.28, 107.10, 106.95 figure. We bounced off it again. We bounced off it. We bounced off it here. We bounced off it there. It's starting to be well, starting. It is a pretty decent zone here. Okay, I would stretch it to 106.95 figure if the US data come out stronger than expected. I would still pay close attention to what's happening around 107, the figure. It is very possible that we get there. I'm actually a little puzzled as to why the euro is holding up so well. But yeah, I think if we get better US numbers, that's a possibility to get down there. Then it depends on how strong those numbers will be, okay? On the top side, 107.85, we're not too far away from that, and then all the way up to 108.05. So that's your little range to observe going into the US data this afternoon, okay, and into Powell. Cable, Brand's favorite. We have respected this trend line, right? We do. And we do respect this trend line. A bit same as in the euro dollar. This is your 125.40. And for as long as that holds, I mean, there's no reason not to respect it, okay? I think we are going to need pretty strong US data to really go for a walk down to 125, the figure. That's going to be the next, well, 125.20, then 125, the figure. That's going to be the next important zone. But looking at how it trades, looking at how the dollar versus sterling and euro especially trades, any weakness in the US data, I think, is going to put a bit of pressure on this 126, the figure. And why not? Why not have a look back at 126.5? So it's not my preferred dollar long. Let's put it that way. It's really not my preferred dollar long. If I'd be long dollars, I'd really would go with, okay, euro is stubborn, but I'd really still would go with dollar yen, even though the 152 is mega important, or dollar Swiss, or perhaps one of the commodity currencies. Although we have to look at all those metals, copper and stuff. It's still relatively big, so they are still a bit stubborn as well. Those currencies. It's very neutral. If you're looking at short dollars, perhaps this may be a candidate in the FX space. Okay, I'm not talking about other stuff, because obviously gold, silver, the other metals are much more beat right now. Also, oil is still very big. Actually, oil being bid could support some other currencies as well, and I'll have a look at stuff like the Norwegian kroner and the CAD perhaps. Dollar yen, well, still the same, huh? Still the same, banging our head against the high 151s. If we zoom out a little bit, I think I need to go onto the daily. You zoom out a little bit, I know I've got a closer one on the 4 hours. if we take this this March move down back into the 146.5, if we take the extension here, it could mean 143. I know that some people on their harmonics or other patterns have something at 154 as well. But then when I look at the daily, on the medium term, I don't have much because this is the correction here. And here I don't have much before 155, you know. This is the big correction that we saw at the end of the year in 2023, and that's 155. So once you break 153, it's going to be really a question of big figures. Now, again, as I say, I mean, we don't know what's going to happen if 152 breaks. Do we see interventions? It's possible. Do we see, is it due to big barriers? We see 152.20 and then collapse a big figure. It is possible. Do we see like huge stops and we trade 153 straight away? It's also possible. I'm still positioned with a call in the dollar yen. I do think it's going to break sooner or later. It will, of course, depend on the US data this afternoon, but it could be a very, very tricky affair up there. So if you have cash in the books, I'd really be a bit careful to trade it around that 152 because it can get very, very volatile. All right. To the downside. To the downside. 150, just under 151, let's say 150.90, 150.80, 150 and a half ish. That's where the support should come in right now. If we see like a big blip and then a drop, I'd say watch those the 150 and a half, 151 zone already. 150 a bit psychological below there, but already 150 and a half, 151. If we see a big reaction there, we should already be looking at. Your long is dollar CAD, Marcus. Let's look at the dollar CAD because it seems to me that we're trading in a wedge here, all right? Oil is moving up, but dollar CAD is not really responding much, right? So we have a little bit of a dollar mix. I'm small surprised that Canadian dollar is not stronger thanks to those oils and where is gas? Oh, gas is not moving much, but I'm a little surprised. The Canadian dollar is completely decoupling still from oil. So and the Canadian market doesn't seem to believe the neutrality of what we are seeing in the Canadian data sphere. So it's still trading the Canadian dollar a bit on the defensive. Yeah, I think long dollar CAD has something for it, especially in the more medium term, for as long as we stay above 135. Okay, 135 is going to be 134.95, 135.15. That's your support zone. And then, of course, top side 135.90.05, and then 136.25 is going to be a level. And then if it would continue to go higher, if we break those 136s, 15.25, then we're probably going to look at stuff like 137 or so, all right, for if you're in the Canadian dollar. I'm very neutral on the CAD right now myself. I can't find, really, barring looking at the picture, anything to really tell me, okay, this is what we really need to do, right, on this Canadian dollar. Aussie, Kiwi, Aussie, yeah, still below this level. Had a retest yesterday of this little trend line, shying back from it again. Is it China related? Is it just the market not knowing what to do with it? Everything's possible. We're still above 65. 64.80 is still my level. It's not 65 the figure. I don't think 65 has any importance whatsoever left in it right now. I'm just a tiny bit playing this one. It's really not a large position. I'm really not in a lot of stuff right now. My positions are not very large, barring in Swiss, where it's a little bit bigger, and then here and there on the yen, perhaps. Yeah, just trading in between the levels, yeah. 65 and a quarter, 64.80. If we start to get back above 65.40, I think then we probably going to push higher again. The market is probably already a bit short again too, leaning into this level. So those are the levels that I'm watching. Kiwi, Kiwi is still bearish, still looking down, but it's it's not inspiring me too much right now. I'm going to wait for the US data. If the US data tell me that we should sell this thing again, oh, okay. But for the time being, I'm out of it. I played it to the short side, took it off really, but not made a lot of it. Just made enough to pay for the bills, and that's it for now. 59 is still going to be the big level. Look at having a look at these candies. I think these candies are starting to get a bit interesting. Okay, we could be in one big bull pennant or whatever on the dollar Norways for in the longer term. Okay. In the meantime, so we've broken out of this of this triangle here. We've not yet reached the high 1180s, but it seems to also run out a little bit out of perf. And then I'm looking at Brent for a guide. By the way, the Norges Bank is still selling small Norwegian kroner every day, so that may keep the market on their toes again. But I'd love to see Norwegian kroner take a little bit of comfort from those higher energy prices and have a little look at what's happening again in the just below 1160 or towards the 1150 zone. I'd love to see it trade this zone again, because there it's going to get really interesting. If you get stronger data out of the US, we unfortunately may not even get this kind of joy, and then we have to look at what's happening, as I said, up in the high 1180s. But I'm putting this one back on my radar because I'm looking at what's happening in Brent. I'm looking at those higher oil prices. I'd love to see a bit of a retracement there, and then see what's happening in this zone. Okay. I'm just monitoring it right now. Dollar Sweden is on a bit of a rampage. I've had like small stuff in there. It looks pretty similar to the Euro Norway, but whoops, what's happening here? But the Riksbank is much more dovish. Is gone back dovish. Okay, so we saw this ramp up in the dollar stocky, and here now I'm waiting to see. It's about 1% away. Waiting to see if we can get a retest in those low 1060s, where I may try to catch a knife if we get down there, and see if we get a continuation in this month of April. Of course, we are all data dependent. We have to look at what's happening on the US data. Okay, but I do think with the Riksbank being a bit more dovish, that I'd love to see this zone here, and then see if we can get a try for a bit of a long. Hey Angela, how are you doing? Right, what are you guys looking at? I'm going to quickly have a look at what's happening in those metals. Gold is on a rampage. There's no stopping it. We don't even get as I said, I was looking at perhaps a retest of 2220s. We're not even getting it. It's just going up and up and up. People are buying gold because of I don't know, moving away from where is Bitcoin? Moving away out of Bitcoin. People are buying gold because of geopolitics, especially now the Middle East situation is not looking great. Ukrainian situation is not improving. Whatever happens between Israel and Iran is not looking great either. So people do still have, well, they do still have reasons to buy gold, despite what's happening on the yields interest rate environment. An interesting one, and you know, guys, that I'm long this one for the long term. But I'm starting to feel I'm perhaps not not going to get my setback here in the 22s. Let's hope that we get really stellar US data and that the dollar picks up and we get somewhere an occasion to let's the market calls this a false break, goes back down here, and then we can load them up again. But it's breaking. It's this we have this double triangle. It is breaking up through 25.5. We're already trading 26.25. It can be quite volatile, and I also find it just slightly surprising that we're up here. It could also be that the market is now buying silver because they see those Chinese data, but then it doesn't rhyme with a lower CNH. So this some correlations are still quite a bit off of what we normally may expect, but it does look like breaking now. Let's see if we get a move back into the 25.5 zone, whether we see levels to buy again. I still think long term this is going to look up sooner or later. Noki Toki, yeah, Angela. You know what, Angela? I was speaking about it yesterday as well on the Flow Show. We saw a lot of end of quarter, start of the new quarter, rebalancing and people managing their portfolios, getting back into stuff, getting out of stuff, and now they got back in. And I think that is the start of our new quarter. You know. That's the end of the quarter, and then we started the new quarter, and people are buying a lot of stuff. So that's probably also one of the reasons. I need to look at one thing because yes, Noki Stocky. I always think that my overall feeling on the Noki Stocky, since I've been a trader, really, is that Noki Stocky should never be below parity. But I've been proven wrong a good number of times on risk of scenarios for one on oil dumping. But if you compare the dynamics of both economies, I think that it should never be below parity. But anyway, yes, we printed a higher low here, and it seems that this 97, 98, 98.5 zone is building up as a decent support. To really trade higher on the Noki Stocky, I think we need to get back above 101. All right, I think that Dimitris should be our sign. If we start to get back above 101, then I think we are going to ramp higher in this one. Okay, but right here, it's gonna be a punt. You know, if you have 1.5 or 2%, 1.5% leeway, you can still buy it here. But I would personally not get too much involved in it. Okay. Our usual Swiss. I let my Euro Swiss go this morning. I'm not saying that we are going to build a head and shoulder here, but just on those CPI data in Europe, I had a bit of everything like sterling Swiss and Euro Swiss and dollar Swiss. So I just took the Euro Swiss off because I'm still not a huge fan of all things Euro in a way. But yeah, it's still bid. The levels are holding, the supports are holding, and one which is now showing signs of breaking here. But the US data will of course tell us if this break gets sustainable. Now it's 90.70. Okay, sorry, we're trading just above. I think if that starts to hold down, then we can finally dream of the next big figure. And I think the next reasonable target, yes, 91.40, but then I'm especially looking at this one. Okay, I've been calling this for a long while now. This is the semi-start, the first start of the year-end dump, and I think we can easily, if the dollar continues to be a bit big, if there's nothing changing, and I remind you tomorrow that Swiss CPI. If CPI doesn't show us too much of a bump higher, that combination, if we continue to see that combination of stable US data even, and the lower Swiss CPI, I think this is one we can aspire to have a visit in around the 92s in this month of April. All right, folks, and this is the end of today's Flow Show. Thank you all very much for coming to the show. I hope you are trading it wisely, and I'm not going to say conservatively, but depending on the one or the other currencies, be a little bit how shall I say, prudent in your trading, especially I would say on stuff like the yen if that 152 breaks, and on those US data and on Powell coming up. Have a great day. We talk to each other again tomorrow. Safe trading. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.